Good afternoon, everyone, and welcome back to the Moneycontrol live stream. You're watching another edition of Markets with Santo and CJ. Well, it has been a deeply negative day. We've seen a lot of selling pressure on the Wall Street, broad-based selling pressure, not only restricted to the large cap indices, largely because of global factors. Now, if you look at the Nifty and Sensex, they're trading clearly near the day's low at this point of time on concerns over Fed rate hike and the trajectory of those rate hikes. Even the mid and small cap space, which were so far outperforming the large cap peers, they also have seen selling pressure and actually had seen selling on par with their large cap peers. Also, the volatility gauge, the India VIX, that spiked about 3% and is now sitting above the 14 point mark. So clearly a concern there. But the biggest move clearly is coming in the forex market, where the rupee has depreciated as much as 1% in a single day against the US dollar, retesting the levels of 82.6 at this point, at this juncture. So clearly, it's been a very negative day for investors, both in the equity market as well as the forex market. But today, I want to discuss something that probably affects a lot of retail investors mostly. Yesterday, Moneycontrol came out with an investigative report wherein we highlighted how a lot of retail investors are being misled by money managers who actually are not registered with SEBI to manage any sort of money. Now, these investors generally are lured by mega returns, promises of multi-bagger returns, and generally if you have a small capital, you would want to double it or make it as big as possible as soon as possible, right? Now that is where a lot of these illicit actors in the market have been trying to take advantage of retail investors. We have recently seen the entire mark-to-market screenshot fiasco that has been going on social media platforms like Twitter, but that also led Moneycontrol to another dark corner of the market, wherein a lot of unregistered money managers actually who are not registered with SEBI as a fund manager, they have been trying to manage crores and crores of rupee of retail investors. Now, if you look at what is their modus operandi, basically they generally would take money from these retail investors or probably help the trade on their behalf through their own through the retail investors account password, as Demat account password, as well as login. Now, in return for that, they generally tend to charge a commission. These commissions can go as high as 50%, 30%, or sometimes they would charge a share of the profit that they might have made for the retail investor. Now, the point to be noted here is that only registered alternative investment funds, PMSs or portfolio management services, and mutual funds are allowed by SEBI to manage funds in the market on behalf of clients. So you can't, without being registered with SEBI, manage anybody's money, at least legally, in Indian equity markets. Now, in some cases, after this, the entire M2M fiasco came to light over social media, some investors actually, wanted to pull out money, and we learned through our investigation that a lot of these investors were being threatened by a lot of these money managers because they wanted to pull out money from them or possibly want to report against them. So clearly, the situation seems to be getting out of hand as far as the entire scenario is concerned. And to learn more about it and to understand this issue, we have joining us Mr. JN Gupta, who is the MD or Managing Director of Shareholders Empowerment Services and also a former Executive Director at SEBI, which is our capital market regulator. Thank you so much, sir, for coming on the show, and welcome.
Yeah, very good afternoon.
Hi, sir. So I'm sure, I mean, you have been tracking this entire mark-to-market issue, and of course, the management of money by a lot of these actors or market participants who are not really allowed to, at least legally by SEBI, to do so without being registered as a platform or as an investment vehicle. Now, are there any sort of safeguards present for investors to protect themselves, those probably who have already may have fallen into a trap?
See, I tell you, the basic problem is the temptation as also the quick rich syndrome. And third and most important is this, that I don't want to pay for the services in a right manner. And that is all the combination. So no amount of legal force will be able to do away with the temptation phenomena. No law can control my thought process and my temptation to do something fast. The second is this, that there are people who will be doing things because, as you say, that problem is widespread and it is there all over the country and more, maybe more in places where the people have got lot of money or something like this. Now, the only way it can be solved is very simple, that when I have to invest, I do some homework. It's like this, when you buy something, you do everything homework. When I just always give an example. A common man, when he goes to buy vegetable, he will pick all vegetable one by one, test them for its texture, freshness and something, and then negotiate and buy. But when we do investment, we don't even know who is the person with whom I am dealing. Somebody may be known to me, somebody may be unknown to me, and I don't know even his qualification. So we are tempted because he tells me, he gives me information that yesterday I bought share A and I have made 20%. And last year I have bought a share at 1 rupee and today it is 15 rupee. So he gives me some sort of a confidence, and I am missold by that confidence that yes, this man is the right man who will be making money for me. Now, my first issue is very simple. Who in this world is such a benefactor that if he has all that formula, he will not make money for himself, but he is willing to make money for myself? So ultimately, it comes to my ability to test the person, whether the person is right or wrong. Now, what happens when you go to a doctor and doctor says that I will charge 50 rupees consultation fee? You feel 50 rupees high, then you go to somebody who is neither a doctor nor a compounder, but he will say, I will cure you in 10 rupees. So if you go for such things, you are bound to suffer. And no amount of legislation will be able to cure this.
Right. So, recently, of course, SEBI has also looked into this matter quite a lot, especially when it comes to, a lot of these unregistered individuals who have been offering stock advisory on channels such as Telegram, YouTube, as well as, social media platforms like Twitter. But when it comes to, of course, the illegal money management that has been going on, wherein, of course, say, I will tell my friend that, I can manage your trading account for you because I've been doing this and that. And you sooner or later you have almost 12-15 people for whom you are managing money without even being a registered investor or an asset manager with SEBI. Is there something more that the regulator could possibly do in this regard, given the sort of strict action that it has taken on the advisory side so far?
See, regulator is doing, in my opinion, whatever is best possible, and as and when there is a system failure, some more things can be done. But please understand, a person who is a fraudster will always be many steps ahead of any regulator in the world, because he will find a newer and newer way. The problem happens very simply when somebody says that I will manage. So first, I get trapped in his story that he has made lot of money for many people. Second, I feel it is very easy for me because I don't have to maintain any books. I don't have to write any email. This person is very comfortable. He will come to my home to collect money and something like this. And probably I will be able to use my black money also to invest. That is the one thing. Now, the problem is that whatever you may do, if any system is to be broken, it can be broken. See, I give an example. From time immemorial, the murder is a crime. But have we able to stop murder all throughout? No, it is not. So we will be able to prove some sort of detraction or some sort of issue where it is very difficult for people to do, but people will continue to. The only way it can be reduced is information, information, and information. I want an investor to be as informed as possible. Today, there is not a single person who doesn't have a mobile, who doesn't have an internet on the mobile.
Right.
One can see all possible news, YouTube and everything. But I do not want to make an effort to check whether the person with whom I am dealing is a genuine or not. So that mindset has to change. I spent 2 hours watching YouTube and all the songs and dance, but I'm not ready to read what is the message that SEBI has given to me, or any mutual fund has given to me, or a bank has given to me.
Right. Right.
So
So, yeah.
yeah,
So, of course, another argument that has been, given when we were, when, one of the, our money control reporter was researching for the story, was also the fact that, to get high quality, money management at this point of time, it's beyond mutual funds, of course, has seems to be out of the reach of, the common man or the retail investor. Especially after, recently when SEBI raised the ceiling for or the entry barrier for starting a, portfolio management service, or for example an alternate investment fund. Do you think that probably there is a need for a calibration and maybe finding a middle ground for this, because there are a lot of retail investors who probably do not want to have the returns that, say, a lay mutual fund offers, but maybe want more from the market, want more sophisticated advice and returns from the market, but probably they cannot. A lot of these, things are out of their reach because of the high entry barriers, say for a PMS fund or an AIF fund.
see, when you say out of reach, I don't really understand what is out of reach. See, the issue is this: if I have X quantum of money, it can be managed only by the person who is capable of managing X quantum of money. Now, if you say that with a 5 lakh rupees, I want to have a service of JP Morgan or Morgan Stanley or something like this, obviously it will not be possible. So it is like this, that if you can afford a Maruti car, you can't compete with a Mercedes or Tesla or something like this. So the issue is very simple. The question that we have to ask is very simple. Are there avenues available in the market? Safer avenue? Answer is yes. Is there information available in the market? Answer is yes. Are investors using that information? The answer is no. Most of the information is not being used by the investors, because they still go by word of mouth publicity. I tell somebody that, look, I had only 1 lakh rupee, but that XYZ made this 1 lakh rupee, 5 lakh rupees in 1 year. So other person also get tempted. But you should understand, we write every time, everybody writes that past performance is not guaranteed. And secondly, you have not audited my performance. You don't know whether I'm telling you right or wrong, whether 5 lakh was made or not. Maybe I am hand in glove with somebody.
Right. So, do you think that probably there is a need for a code of conduct, or maybe even best practices, even for those probably, who are looking for, investments? Probably if you do want, say, such sort of services, maybe SEBI can bring out a code of conduct or a best practices that can allow a lot of these individuals who are probably at this point of time unregistered money managers and of course fraudsters. But there are of course certain cases which are genuine. Of course, you cannot paint everybody with the same brush. But for genuine cases where there is a talented money manager out there, or an asset manager out there, but probably does not have the capital base to start a PMS fund or an AIF fund, do you think in those sort of cases there could be done something for those sort of asset managers who are actually genuine out there and who are not really looking to fraud any sort of investors?
See, I tell you, it is very easy for me and you to say something that SEBI should be doing it, but you got to look into the repercussion. The moment SEBI says this is the code of conduct for unregistered people, then the issue will come that if I, as an unregistered person, has a code of conduct and there is a violation, who will punish me? Because I am not registered with SEBI, SEBI will not punish me. So then the investor will say, look, you have given a code of conduct for JN Gupta. JN Gupta is not following, and SEBI what you are doing. So SEBI cannot step out in a situation where it cannot control.
Okay.
The issue is very simple. Buyer beware is the maximum, that I have to be taking care of myself. SEBI or RBI or government or police or judiciary, they can do only limited work.
Understood.
If I keep my house open in the night and sleep peacefully, and if there is a theft, I can't blame anybody else except myself. So the protection has to start from you yourself. All other organizations are going to enhance that protection. But if you are not basic protection, you are not doing yourself, there cannot be any enhancement of the protection.
Understood. Well, words of wisdom from JN sir there, and thank you so much, sir, for coming on the show and clearly elaborating on this issue and giving your own insights on this issue. And hopefully that has helped a lot of our viewers. Of course, beware. That is the maxim. Look after yourself. Read information. Read up before you are trying to take any sort of step in the market going ahead. Well, on that note, let's move on and look at the stocks that were buzzing on trade today. And there were two stocks that really came up on my radar this morning, and one of them, of course, is from the banking space and PSU banking space in particular. This is Bank of India. Of course, the stock was buzzing in trade, higher by almost 5% at one point of time after a bullish stance coming out from the house of Morgan Stanley. Now, Morgan Stanley has raised its price target on the stock by as much as 31%, just within 2 months. After bringing in a initiation coverage on the counter, and now Morgan Stanley has given a price target of 125 rupees on Bank of India compared to 95 rupees earlier. Now, they believe that the Bank of India's loan growth trajectory at this point of time is pretty sustainable, if not and can also, of course, improve from the current levels, heading into FY24. Also, the lower credit cost environment that Bank of India is enjoying, along with some of the other PSU banks as well, that should also provide cushion and momentum to earnings heading into FY24. So clearly, a very positive stance coming out from Morgan Stanley, and that is one of the reasons why the stock was buzzing in trade today. The second one was Ethos Limited. The stock, surged amid a very positive outlook coming out from various analysts at this point of time. Now, the argument around Ethos, and I had talked about this, stock earlier in our show as well. At this point of time, the argument seems to be that, see, luxury watches or luxury watch market is probably at an inflection point as far as India is concerned. We have seen almost 20% plus CAGR growth over the past 3 years in this segment. And the hope is that as India's economy develops more and more, especially this decade, there is going to be a surge in the number of high net individuals as well as ultra high net worth individuals going ahead. So clearly, as the luxury quotient rises, there could be demand for more and more luxury watches going ahead. And Ethos is trying to focus in that segment singularly. And that is one of the reasons why a lot of analysts at this point of time are quite optimistic on this company. Monarch Capital, for example, which has initiated coverage on the stock yesterday, they are expecting a 28% annualized growth rate for in terms of sales from Ethos Limited, as well as a PAT growth, annualized PAT growth of about 66%. So clearly some big numbers, some big estimates coming out from Monarch Capital with respect to Ethos, and if the company can deliver on the expectation, clearly this could be one stock that could be worth watching out for. So those were the two stocks that I was really intrigued by in today's trade. On that note, let's quickly take a check on the market and how we are doing at this juncture. But clearly it seems like we are going to have a negative close on the market, but we have come off significantly from the day's low. The Nifty and the Sensex lower by about 0.3% as compared to about 0.5 to 6% earlier in the day. If you look at the small and mid cap indices, I think there's been some bit of recovery there as well. The Nifty mid cap index down about 0.4%, so clearly underperforming the benchmark. But the Nifty small cap index is now down only 0.2% as compared to 0.4% earlier. So there has been a little bit of recovery in the broader market as well. If you can have the chart of the India VIX as well, you can see that India VIX has also come off a little bit, up only 2% now as compared to almost 3% earlier in the day. So some bit of bullish, comeback coming or a fight back coming from the bulls, but overall it looks like it's going to be a negative close on the Lal Street, ahead of course of a very crucial meeting tomorrow morning, and we'll talk about that in our next section, what to watch out for tomorrow's trade. And there is of course only one major event tomorrow, and that is RBI's Monetary Policy Committee's outcome. Now the meeting will end tomorrow and we will have the governor's statement tomorrow morning. So clearly a big day in the market. At this point of time, it seems like the street is a little divided whether the RBI should or the MPC should raise rates anymore, given the fact that inflation, it seems, is clearly heading downwards, or maybe it should take an insurance rate hike of about 35 basis points, given the fact that the Fed itself will probably raise rates, most certainly raise rates at its meeting later this month. So clearly, it will be very interesting to see what sort of commentary also comes from MPC and the RBI governor with respect to inflation, with respect to growth, with respect to the interest rate trajectory going ahead. So far, if you look at some of the multilateral agencies, they have been downgrading India's growth rate. At this point of time, the average growth rate expectation for FY24 is somewhere in the territory of 6 to 6.5%. So clearly, the possible global recession might have an impact at domestic growth as well. And MPC members will be cognizant of that when they are deciding what sort of measure or moves to make tomorrow morning. So that is it from my end. Please keep commenting, let us know your thoughts, your views, and of course your criticism in the comment section below. And for all our other sort of services, keep following us on the social media links that you can see at the bottom of your screen, and keep logging in to moneycontrol.com and the Moneycontrol app. We'll catch you again live tomorrow morning at 9 a.m. Till then, have a great day.